The UK infrastructure sector outlook remains strong, supported by a major investment across nuclear energy, power and energy transmission and distribution, aviation, water, and rail.
Hello, you're watching Proactive. Joining me are Hercules CEO Brusc Korkmaz and CFO Paul Wheatcroft. Brusc, Paul, very good to speak with you today. Brusc, I'm going to start with you. Could you provide some more details on the factors driving the growth in the company?
Thank you, Stephen. We achieved a record revenue of £54.6 million in the first half of this year, which is great, and it's representing an 18% year-on-year increase. Our labor supply division delivered 31% revenue growth, driven by increased labor activity on major infrastructure projects such as Sizewell C and HS2. We also expanded our rail division and secured new client wins across key infrastructure sectors. Our strong operational momentum is underpinned by our unique digital platform, which ensures efficient labor deployment on these key infrastructure projects.
Paul, could you explain the rationale for the sale of the Suction Excavator subsidiary and how it's benefited the company?
Yeah, thanks, Stephen. Well, this was one of these things that we came to realize was a very important strategic move for us. Our investors had been sort of like saying to us that they didn't really like the debt on the balance sheet, and these are expensive items, these suction excavators. So we decided to divest ourselves of the business, which we did. And we completed the sale in February of this year. So we sold it for £2.3 million. And the reason we did it, really, the subsidiary itself was 88% of all the debt we had, but it was less than 5% of the revenue. So by doing this, we reduce our debt and lease liabilities by £9 million. We free up cash flow and resources to focus on the sort of high growth labour supply activities that is our strategic primary objective. And it does exactly that. It supports that acquisition strategy and that long-term focus on labour supply.
Brusc, how will you maintain the growth in the labour supply division?
Well, this growth will be coming from organic growth as well as potential acquisition opportunities in the labor supply sector. We continue to support flagship infrastructure projects such as Sizewell C and power and energy transmission and distribution sites where labor demand remains really strong. Our presence in the rail sector is expanding and underpinned by a growing tier 1 client base and strong delivery performance. We are actively scaling into power and energy and water sectors with AMP8 activity now underway and expected to ramp up from this summer onwards. So this is a great opportunity for us to scale up our water presence in the water sector. We have our regional offices has been established near Sizewell C project to support long-term delivery on this nationally significant nuclear project. Our digital platform, including our apps, enables us to source and deploy skilled operatives efficiently and at scale. One last point being our Hercules Academy, which we established just over a year ago, continues to address skill shortages and supports sustainable development of our workforce. As you might have seen from the RNS, we have trained over 1,500 people, Stephen, over the last 1.5 years.
Paul, what role do you expect the Construction Academy to play in supporting the company's strategy?
Yeah, well, and it's located in Nuneaton, which is near all the Birmingham section of HS2 and their particular sites, and it targets underserved communities. So Nuneaton is a deprived area in that respect. It delivers funded skills boot camps and collaborates with local authorities and colleges. As well as that, it supports long-term workforce development and strengthens client relationships. Everybody will be aware in the industry that the Construction Industry Training Board projects that the UK will need nearly on its way to 250,000 additional construction workers by 2027. This academy has only opened in January 2024, but it's doing really well. Since then, it's trained over 1,500 individuals, and that's increasing all the time. As a final point, you will have noticed just recently that we have completed the acquisition of a company called QTT. It's a small acquisition, but it's very important in terms of training, and this will enhance the capacity that we have to deliver training and give a wider breadth of curriculum that we can offer to people. So we're really pleased with that, and we think that's going to help the whole training offering that we have in the years to come.
Paul, staying with you, can you outline your strategy when it comes to M&A?
Yeah, I mean, we are really focused on strategic acquisitions that enhance our core capabilities and that training infrastructure we've just been talking about. We just mentioned about the acquisition of QTT, but far more wider than that, we're looking to find companies that will help us accelerate growth, broaden that service offering, and deepen the market presence that we have in labour supply in the wider infrastructure market. Obviously, anybody who follows us will know that we raised a significant amount of equity in September, October of last year, as well as receiving the funds for the sale of the suction excavator business that I've just referred to. That clearly, all of that really improves our balance sheet position and allows us to pursue those further really important M&A opportunities.
Just finally, Bruce, what's your outlook for the UK infrastructure and construction sector? What's your key priorities and expectations for the second half of the year?
The UK infrastructure sector outlook remains strong, supported by a major investment across nuclear energy, power and energy transmission and distribution, aviation, water, and rail. Government commitment and a robust pipeline of infrastructure projects, around 700 to 750 billion pounds over the next 10 years, provide long-term visibility, including the recent Sizewell C announcement. We are already supplying labour to the early works phase of the Sizewell C, and we expect to continue supporting its 20-year and 30 billion pound construction programme. We anticipate continued momentum in the second half of this year, with performance typically weighted towards the second part of this year. Our key priorities include scaling our labour supply division, expanding into rail and the civil frameworks, and successfully integrating QTT into our Hercules Academy. Just a final point, Stephen, we remain very confident in meeting our full year market expectations.
James, I hope you'll continue to keep us updated with your progress. Thank you very much for taking the time today.
Thank you, Stephen.
Thanks, Stephen.
Thank you.
Hercules CEO Bruce Korkmaz and CFO Paul Wheatcroft.